Traders, welcome back to our price action trading lesson. Before we're going to dive into today's lesson, I want to briefly talk about the structure we had last Friday because the examples we're going to talk about are going to be quite similar to the structure we traded today. So last Friday, if you can remember, we had a very strong downtrend. In the first trade, we saw very nice, clean and broad two-legged pullback, double top, slightly above the EMA as an EMA bar. Strong downtrend evolved. And then we had this particular scenario where we spiked into EMA, one leg into consolidation, while market needs to form a second leg. So remember these two important areas, these two examples, because we're going to use them and talk about them in today's lesson. Alright, so now we're looking at today's session. This black line is indicating the beginning of today's session. And we basically have downtrend from the open. We traded straight down. EMA keeps rejecting every single time, so we can't even break above the EMA. So this is definitely a strong downtrend. I drew this secondary channel that has a break in extreme. The big channel seems decent, but I'm not a big fan of big downtrend like this, simply because as of right now it seems too broad, so much empty room here. There is no consistent series of lower highs and low lows, just deep spike down. So it's better for me to focus now on the most recent structure. Prices keep trending lower even after breaking extreme. So market definitely looks bearish, but I want to see how bullish reversal attempt will look like. So let's see what's going to happen. And buyers can't even break above the EMA, and this is important. Already at lower high, EMA keeps acting as a resistance. There is small key level resistance formed, indicating that sellers are selling at this important level. So the market is still bearish. Look at the consistent EMA rejections. We have a new high, first entry long, pullback, second entry long, failure. But this is exactly around the open, and we can't take a setup exactly around the open. There can be spike in volatility and market continues to go lower. So little tip that I use, once I can see a bunch of small bars just stacked and crammed next to each other at the very bottom of my screen, that is generally a good sign that the trend down is strong. Look at the entire chart, it's completely empty and all the price action is at the very bottom. It forces me to squint my eyes. It forces me to zoom in to truly see what's happening. So that is just a subjective tip that I use, that it looks like the downtrend is going to be strong. But now more importantly, as price action traders, we always want to identify a channel. You already know the drill. There is always a channel and these candles are part of some pattern. So because we spike down like this and now we have some market geometry working sideways, I like thinking about some possible spike in a channel pattern, something like this or like this. You don't have to be perfect, but you have to start looking for some spike in a channel pattern because there has to be some pattern. This aligns with the EMA and it fits pretty well. Let's see what's going to happen. We are correcting and we have new low, first entry short, pullback, second entry short. So we already have visual to like a pullback. Key entry points are holding, uptrend played out, and this is a second entry short. But I cannot sell below bull bar. It has a bullish body, and by the time I get a double bar entry, it's simply too big. Most of the scalp is made. So I can't really take it, but it confirms the channel. And this is a good sign because this trend is confirmed. It aligns with the EMA and I can keep looking for short opportunities. I'm even thinking about buying. My main focus is on short entries. So market is correcting and I have the same issue as last time. I cannot sell below bullish bar. So I gotta be careful. And I can already see market correcting. And we're going a little bit sideways, so what I like to do is I like to draw small consolidation. And once this setup is forming, you can already see that it resembles the first trade we talked about last Friday. This is why I started today's lesson talking about the Friday session. You can see that we already have one leg break, second leg, visual second entry short. There is also double top and we broke above EMA. And the downtrend needs to get new extreme. So this looks similar to the first setup we took last Friday. It's a great bearish bar, visual to like a pullback, and this is first decent high probability setup for today. Price action rules work the same all the time. Market continues to go lower. We have new extreme. Some pausing looking to go short, but prices keep trending lower and we keep trending lower. And not only that, you can see another push down. So after breaking new extreme, you have to explain why prices keep trending lower. But I can also see that the break is not as strong and violent. And the push down also seems quite structured. We can't even break above the EMA. It still looks like a consistent series of low highs and low lows. So it looks like there is some broader channel. Remember, when the trend is very, very strong, you can have more wider channels developing. So what I like to do is make it a little bit wider, and I still have a bunch of confirmations, and the channel looks really, really well. It basically holds the structure. It still resembles a healthy downtrend. So I'm still playing the structure. Notice what we have now. Uptrend working higher, spike into EMA, and now you have second entry short with small consolidation. And this is similar to the setup we talked about last Friday, the second trade I showed at the beginning of today's lesson. We can't take it. We have 1, 2, 3, 4, 5, 6 bar stack right next to each other. We have one leg, break. So where is the second leg? It's too congested. So it's similar to the setup last Friday, and we can't take it. Too much congestion, we spike into this, it's unclear, and we gotta be careful. So hopefully it makes sense. Seeing these repeat patterns, it makes it easier to learn, so I like showing them. Now we are breaking this trend line, and this is once again visual second entry short, and technically this is EMA gap bar. This is the first bar. EMA gap bar is the first bar that broke and closed above EMA since the downtrend started. You can see there's a gap, so you expect prices to go back below EMA, but it seems a little bit aggressive. It's not that easy because, you know, it's not technical second entry short, it's only a visual one. It's not a horrible setup. I can mark it. You know, now that I'm looking back, you can see that you have some key level here. The support is acting as resistance, but when you're watching this live, everything is moving so fast. I prefer to wait for push below EMA and a lower high confirmation setup to truly confirm that this downtrend needs to get new extreme. Uptrend played out, breaking new high, so it's also a good sign. We're pushing below EMA, so I want to see a lower high confirmation setup to get the new low. I have a lower high here, but it's terrible. This is terrible signal bar. I cannot sell below bull bar. The secondary bar is terrible as well. On this chart, I can't take it. Perfect setup context wise. If you have a lower high below EMA, you can take it, confirming to like a pullback. You need new low, but on my chart, I simply cannot enter. Nothing I can do. New extreme, and prices right now are breaking higher. Now let's see what's gonna happen. We have a strong push up, so I'm pausing, looking to go short, but we're back below EMA. When I was watching this push below EMA and the reversal failing, I took a look at 10,000 tick chart, and I saw that the spike and a channel pattern on 10,000 tick chart is still in play. And once again, the break is tiny. I can easily draw a little bit wider, but the fact that I have confluence with the 10,000 tick chart makes me confident that this wider channel is valid, small overshoot, and now I can still think about selling. Because we have overshoot, I can expect stronger correction. So when I'm watching this, I'm not taking anything because this uptrend is the spike up. So there can be second leg up. We have overshoot. Okay. So what I'm thinking about, I want to see initial I have my resistance like this. I'm already drawing trend range because we're starting to go sideways. The reason why I like to draw a trend range because you can combine the trend line rule expecting new low with the trend range rule, you're going to sell high. So this is why I like using as many patterns as I can, but it's simple price action. Now we are going sideways. EMA is in all these bars, too much congestion. There can be new high. So this is pretty much waiting area. I'm not rushing to take anything. Ideally, I would like to see uptrend, broad break, second leg up. I would like to see break a new high, resistance holding, and then I want to see a lower high below EMA or failed second entry long. This is my thought process. Because once again, you can see this is not acting as reversal because reversal is sharp, wider channel above EMA. This is already too broad. Still, sellers are present in the market. The overshoot is generating a little bit stronger pullback. So let's see what's gonna happen. Okay, almost new high. You have a lower high here, but it's above EMA. I can now lower the resistance, but we don't fully have new high. It's almost there. Close is close enough, but still a bit too aggressive above EMA. Had it at least close below EMA, you can argue for me to marking it, but still above. But it definitely confirms what we were thinking about. We have broad two legs. Market moves in pairs of twos. You can see resistance is holding. Push below EMA is confirming the fact that we need to get new low. So can we get a failed second entry long? Yes, but technically we triggered below the second bar. and we're not full at the EMA. So this is a decent failed second entry long, but didn't form that great locally. But it's at least good to know that you expect it to happen. You can read the price action, so you know what's gonna happen. But you know, there is no break below this bar. You have to go short here. So far from the EMA with the body, not ideal. Can I get a minute second entry short? No, and the downtrend played out. So all trends now played out. The spike and the channel pattern right now is indicating that the downtrend played out. All channels, even the secondary one, played out. So I now am pausing, looking to go short, but I don't want to take the first failed second entry short above EMA because it was too strong. So this is mainly what we call area of development, and I'm going to be patient. Let's see what's going to happen. You know, you can see a new first entry short, second entry short. We're not pattern traders. We cannot take the last second entry short at the bottom of the move. That's not how we trade. All trends played out. You cannot take second entry short now. It doesn't mean anything if the context is not good. So market is just chopping. Market is just chopping. I'm going to redraw the uptrend working higher now. Something like this, because I always want to have channels on the chart. So now I expect new high. We only have a first entry long, breaking new high. Uptrend played out. I'm going to draw downtrend working lower. I was expecting second entry short at the EMA, new low first entry or second entry short, but there was no bearish bar. We just continue working higher. So now I have to adapt. I need to redraw a brand new uptrend. And this was pivotal. The fact that this downtrend cannot get new low is indicating somewhat of a bullish reversal. So I'm definitely not thinking about selling now. And I'm mainly waiting to see how this uptrend is going to develop. So market keeps working higher. We have a small break new high, but prices keep going higher. We keep going higher. Now we have a second entry long here. Okay, we have a second entry long here. New high, first entry long, pull back, second entry long. Problem is, yes, I can draw the channel a little bit wider. That's a good alternative, but I can see broad two legs. We just reached the measured move. The downtrend doesn't have new extreme. So what if there's going to be the second leg down? You just reached the measured move. You have to be careful. I want to see this measured move exceeded so I can consider buying. What if there's going to be some stronger pullback, especially if there is no breaking low. If you have two leg pullback down with the breaking low, you can go long. But this is a deep leg working low. So even though it worked, you know, I can't mark it in hindsight. Just because it worked, that doesn't mean it's a good trade to take. Next time I'm going to take it, it's going to fail. And that's not what we do. We want to learn to take setups that are high probability, not setups that are way too much of a gamble. And this is simply way too aggressive. Even though it worked, there's nothing I can do. You know, quite sketchy. Market keeps going higher. Now what I like to do, I like drawing even wider channel like this because it simply looks too bullish, too clean. But I have overshoot. We exceeded the measured move. So because we exceeded the two-legged pullback, because we exceeded the measured move, this looks like we have a brand new uptrend established. And this is why I'm drawing a wider channel, because once you exceed the measured move, there has to be a reason. Overshoot can generate stronger pullback in the opposite direction. This is exactly what's happening. And we have another second entry long. New high, first entry long, pullback, second entry long. But the same reason, I don't like it. I don't like it because look at this significant leg down. I cannot tell you how many times I got trapped in the past taking this second entry long, and sometimes even a failed second entry short may not be enough because there's going to be the second leg follow through to test the new extreme. Such a violent spike below EMA after overshoot. It worked once again, but I don't want to mark it. I don't want to mark it. You know, more aggressive trader can consider maybe more aggressive, barely marking this aggressive, barely, because I get trapped so many times. Just because it works here doesn't mean it's going to work next time, but you can see significant push down. Now, as market keeps working higher and we keep working higher, I have to answer the question why we keep working higher. So when I'm going to look back, I can see that there was actually an alternative for me to draw something like this. You have a channel where we can disregard the early break, but I know that only in hindsight now, because when I'm watching this live, I either have this uptrend that played out with a break new high, or I have overshoot. So we have to learn the price action as if we're watching this live. This is why we're doing these reviews, to learn the price action. So when you're watching market develop live, you can enter with confidence. In hindsight, this makes sense because in hindsight, it explains why there is no new extreme, because there's a key entry point we push above EMA. You can see nice market geometry here. I can sometimes disregard the early break. They can sometimes happen, but unfortunately, it's only very obvious after the fact. So when you're watching this live, this is not easy setup to consider because it looks either like overshoot or this downtrend is too strong. But now the trend is clear and we can take a deep breath because we have a nice uptrend working higher, and I'm just looking for second entry long at the EMA. That's it. I'm just looking for to get pullback at the EMA. The trend up is clear. We have a new high. I'm going to reset the count, first entry long, and we have a second entry long here. We have a second entry long here. Decent setup. You can see market moves in pairs of twos. One leg down, second leg down. Downtrend played out. Big bullish bar. You have to use double bar entry, and this is a good setup. I will mark it. There's nothing wrong with this setup. Technically, I didn't take it because it's too big. You have to put your stop loss here, and it was over 5 points. I was thinking about limit order somewhere in the middle, decreasing the risk to 4 points or 3.5, but it never came back, and it's okay setup. It's a good setup. 2 legs down, context wise good, uptrend in play, downtrend played out, but it's mainly risk reward like, difficult to enter, but educational wise, technical wise, there's nothing wrong with this. So this is a good setup to take second entry long at the EMA. Market keeps going higher. Just gonna slightly widen like this. We're breaking lower, so I'm gonna redraw the downtrend. Okay, we're breaking the channel, we're pushing higher, so now we're expecting new high to be tested following the trend line rule. We're correcting, nothing good here for a entry long, and this is interesting because you have a new high for a entry long, pullback, second entry long. I think there's a mini break here, but you can see first entry long, second entry long visual to like a pullback, and also new low, like a first entry short, pullback, second entry short. So we can see double high probability setup. We can see how many sellers sold here right into the key entry point and reversed on them. They're now panicking. So this is second entry long and a felt second entry short off the trend line. You can see how nicely the trend line keeps holding. We need to get new high following the trend line rule, and this is great setup, great signal bar. It's below EMA, but because it's at the trend line, it's okay, and market keeps going higher. You have a break and new high, so the uptrend played out. So now I'm gonna pause, looking to go long. Your downtrend working lower. I can already see small consolidation developed, so I'm gonna draw it because once EMA is going flat like this, I'm trying to predict small consolidation. We're pushing higher. I can redraw the uptrend. This is interesting setup as well because you have a new high for the entry long, second entry long. Now the main uptrend played out, so it's not super easy, but there's a chance this uptrend is gonna test new high. This is not such a horrible setup as it may seem after new high of the main channel because EMA keeps holding. There is nice momentum locally, very nice setup, so I can mark it a little more advanced. Breaking new high, so all uptrends played out. So you gotta be careful. We're going sideways, so I'm going to redraw the short-term downtrend. In order for me to sell, I want to see prices breaking the trend range. I want to see breakout pullback. I want to see second entry short at the EMA, but we are breaking higher. Okay, so which pattern is now valid? Because the downtrend doesn't have new extreme, but we are already back above the EMA. I can see if I'm going to zoom back that we have one leg down, break, second leg down. So on a higher time frame, it looks like 2 legs down, and we traded up into this. We had a strong uptrend into this consolidation. So once we are already back into trend range, we're thinking more about buying rather than selling. But this high low seems a little bit too conflicting to take already because this looked like significant downtrend may start. Is it gonna happen? Felt second entry short, had no trigger. I want to see second entry long. Felt second entry short, had no trigger. You have a second entry long here, but it's an inside bar. Had it at least tick below, you can consider, but on my chart, it didn't, even though it worked. You know, decent entry, but an inside bar. And now we're just going basically sideways. There is no bias. We have a new low for this entry short, but we're just going way too sideways and we can't take anything because the downtrend played out here, break new low, trading range. Now it's way too late. So this is the overall structure for today. We ended up having a lot of setup, so it was a decent price action, spike down and a channel, and then uptrend working hard, breaking new high, consolidation, reversal. So exactly market cycle. So I hope you had a good trading day. I'm going to wrap it up. And I'm going to talk to you next time. Good luck with your trading.